Welcome back to Trading 360. It's time for the big three. Let's get some charts. Let's get some trades. Ben joins us in-house, and Mr. Mike Shorr from Prosper Trading Academy, the Director of Trading Education. Mike, good morning. What's up?
Hey, Oliver. How are you?
Doing well. Good to see you. Glad to be here on 360 with you. All right, so we got three stocks, and we're looking at a couple cloud names. What brings you to these names, Mike? They're all pretty growth-themed. A lot of them have been beaten up.
Yeah, beaten up, and I love the sector. I've continued to love it, and especially as they've beaten them down. I actually have not bought them up until looking to buy them now, and it looks like they heard me because they jumped a bunch of these. If we had been on at 6:30, we would have had some killers on, but we'll see if it comes back for us.
Seriously, Oct up 6.5%. Twilio right now up 8%. Let's go to Okta first. I think the chart's pretty interesting because that one's kind of got this like double bottom thing. Let's start with the technicals first, Ben, and then come back to the logic of the trade. I want to look at the chart first just because I think of all these, maybe the most compelling potential for turnaround, Ben. I know you're a hard sell when it comes to trend reversal, Ben, but should we give Okta credit for a double bottom here?
Should give it credit for a double bottom, Oliver, and Mike, good to see you this morning. But guys, I'm still not necessarily buying into this move here in terms of its ability to take out anything significant to the upside, still holding below the June highs, around 110. But let's begin with the hourly time frame because, Oliver, you were mentioning the double bottom that we've seen recently. We saw a couple tops here around this 196, 197 areas we've come off. You can see a little bit of consolidation down here around this $90 to $100 level. But Oliver, I want to point out we're at the lower extreme of the range that we've been in over the last 90 days. We step away from this into the daily time frame. I left these charts real clean because here you can see that double bottom you just mentioned, but look at this triple or just, again, multiple tops here that we've seen off this 280 level. So the stock has struggled. You can see it's come off here and again, just consolidating at this lower level. So not rejecting these lower levels as of yet. No indication of a V bottom or anything like that. Still in a trend lower, it appears. And as you take a look at the weekly time frame, you're going to see some of the price decay off that upper level at 295 we saw end of 2020, beginning of 2021, down on the year by 65% last I looked. Now it's up significantly today, as you mentioned, by about 6% here as we speak, so trimming some of those losses, but over 60% to the downside year to date, down 10% we'll call it this month alone, Oliver. I mean, again, a stock that's come under pressure and just seems to be consolidating down here.
Longtime favorite of the cloud security, identity management, enterprise business with a lot of dominance in its particular industry. So it's really been a brutal trade. I don't think a lot of people expected Okta to unwind as fast and as savagely as it did. So how do you do the trade here, Mike? Is it looking for major turnaround, or is this just like an extension of that double bottom bounce?
Yeah, so I'm looking for the bounce. I was not expecting the 6-7% move that we're seeing, but so I'm looking for kind of a grind and not for it to go and take out major resistances or anything like that. So I'm looking at that 100 level. If we can grind up to that between now and July expiration, it's exactly what I'm looking for. So I'm looking at that 100 calendar, regular July versus July 1st. This morning would have been great, but if we get that pullback, so we've seen when things start to turn, these are the type of names that you're going to want to be looking for, at least that I'm looking for.
The high beta bounce back. Okay, so walk us through it in some detail. The July 15th, July 1st call calendar. So you've got a chunky little range. This thing can make money, but the real payout is fairly specific.
Yeah, so with a calendar, you're playing against you're kind of long, a little bit of Vega, but you have decay coming towards you. So a binary move through your strike is not what you're looking for. You're looking for a move and sit or a grind up type of move. So your short option doesn't, that short gamma associated with it doesn't kill you. So if you go blowing through 100, that's a problem. But ideally, between now and July 1st expiration, if we slowly grind up, not even 2, but near 100, then those are going to hold up with your July call in the back. and then your July 1st call is going to decay to nothing. And then you can turn around, either exit the trade depending on, what your return is, or you can roll that into a vertical spread in July. You can do a July 8th against it, depending on where it is. It's one of those things that it gives you options, but you don't know what you're going to do until you get there.
Okay, I like it. So essentially you're saying that there's a bounce potential here for the intermediate term, the next 20 days or so. But given how this market has been, still has a capacity to sell, you don't have to hit it perfectly. In fact, you kind of don't want it to sprint. You want it to grind. You get a day off or two, and you don't have to stress about it too much. All right, makes sense. Let's talk some Twilio here. Kind of similar, cut from the same cloth, but you've got a slightly different approach for Twilio, and maybe the chart maybe not quite as compelling, Mike?
Yeah, the chart actually looks similar. It's a cloud stock. It's not exactly the same type of identity thing where we're talking about with Okta, but with the higher nominal value, you do run the risk of running through that, so that just the underlying price can move more on you. And the way that the time structure was, I didn't like the calendar as much, but I did like the resistance that it was potentially breaking through, and today is, and you get that kind of binary move up. So that's what I'm looking at there. So I was targeting for that one. I'm targeting the 100 level again, but doing a broken wing butterfly, which is what it is. It's two call spreads. You have one call spread that's wider than the other one, so you have delta positive on that. So that's what you want in a bullish scenario. And so I have 7 in the front, so a 93, 100, 105. So you have 7 in the front, and then you have 5 in the back. So it lowers the cost of it, still targeting where you think the implied volatility is telling you to target. And if it blows through that, actually, this is still going to be a positive trade. So if you get some sort of crazy binary move from here, then you still have profitability, which things. A lot of your cheap option plays are cheap for a reason. Is because that you really have to thread the needle on this. This gives you some room that hey, we're bullish. It gets to your middle strike of that broken wing fly. Great. If it blows through, still profitable. There's nothing worse than being right directionally in a trade and somehow figuring out how to lose money.
Story of my life.
This will allow you not to do that.
Okay, I think every trader's life, right? Options that get you coming and going, but they can be nice to define your risk at least.
Can.
All right, so risk defined and a pretty interesting payout structure here where you're buying the 2 different strike calls and then selling the 2 at the same strike. So you obviously have that bullish bias, but you've got a decent little buffer here to where you're not getting destroyed if the thing does move lower. So Ben, when you look at the chart, what do you see? I mean, a different, a little bit, that kind of marginal distinction from Okta where we haven't made a clear double bottom. Is that the case?
Yeah, but a nice move off lows nonetheless. Okay. Still, though, limited in terms of ability to take out anything significant that was established on the way down. And at this point, no indication that we've rejected this lower level. More so looks like we're starting to consolidate a little. But let's begin with the hourly again and just how we're hanging out near the lower extreme of the range. You can see from 202 down to 77. This is the last 90 days worth of data, and you can see no rejection at this lower level, inching higher at 95. We're up by about 8.5% here. But take a look at the daily time frames. We step back from this hourly. You can see the well-defined migration of value to the downside. So we're trending lower. And this is kind of what I think you guys are looking at here. The attempt to break out of this balance area number 7, right? So the idea would be that you'd see a vertical move to the downside, lower lows and lower highs, and a high conviction trade similar to what we've seen defined or playing out here in terms of separation from some of these other areas of balance on the way down. But Oliver, you can see that we worked our way up. So actually what I'm starting to see is this did appear to be a failed breakout, but until we take out this, well, we're talking about the 110 level, 113, that would be significant to the upside. But even more so, we'd have to get up above the middle of this balance number 6 prior to any indication this working assumption the market's trending lower has ended or is invalidated. So what I actually did is take a look here. Let's just pull up a different drawing set and And you can see here, I just kind of all-inclusive fat crayon sort of draw this as, again, a range-bound type trade here. Upper extreme 113, lower extreme recent lows around 77, in line with the pattern we've seen. So migration of value to the downside. I sort of think of this as almost reminiscent of, look at the price activity you saw back in October of last year. We broke out to the downside, rallied all the way up through that range. I have it identified as 2, but failed at the upper extreme. So again, I think 113 will be significant, and 150 is significant if we take out 113, which is not as big as it seems, but that's the first area, the first flag to fly. Lastly, looking at the weekly, you can see, again, coming off here. Actually, Oliver, I wanted to point out similarly in terms of Okta, we're talking about down 60% year to date. Now, I made a mistake with Okta. I said it was down in the month of June. That was Twilio, actually, again, was actually lower in the month of June, around 10%. Okta's actually up this month, so just to correct that. But I do want to point out, again, lower year to date, significantly down 60% plus, and here you can see we are.
Easy to confuse when they both have gone through such a bloodbath. I like the way you've got those segments, Ben, that shows how orderly it has been.
Yeah.
If we look at Ben's chart one more time, just real fast, an 8% rally in a stock like Twilio barely even registers, on that steady equilibrium of consolidation and selling. Really like that perspective. I want to just go back to Mike's trade real quick because it was a little bit more of a complicated one. Just to look at the strikes one more time here with the 93 calls that you're buying, Mike, the 105, and then selling the 100. And your ideal price here is what, Mike? Where does that apex of the payoff?
Yeah, so it's right in the middle there at 100.
Okay.
Because if you think about it, you have the 2 call spreads, right? And both you're short on your long call spread is 100. You're short on your short call spread is 100. So you maximize your long call spread by getting to 100, and then theoretically your short call spread goes out worthless. Of course, that's at expiration. The trade just about any price between now and then.
Okay, I like it. All right, so basically the broken wing butterfly, you kind of take the idea of the call spread, but then you specifically skew it towards a point by selling those other 2 options. So you've basically got that 100 as your apex. All right, interesting. All right, last one. Mike, let's go over to China. Let's talk JD.com. China stocks are looking pretty decent, and they've been trying to come back. There's been some pretty vicious moves here.
Yeah, and we're getting positive comments out of Premier Xi this morning that is giving lift to that again. What's difficult about this market is that you could look at anything and say, well, just sell it because I'm bearish on the market. It's really hard to rationalize those sales at these levels looking when you look at a chart. You could say, well, I'm not bullish, but to say that this is bearish and we got to go make new lows. So I'm looking for value plays, things that in this market, almost, pairing my trades, that if I'm not convinced to the upside, but I want to buy something, I got to pair that up with something that I think, at least on a technical level, is overvalued. And, the story behind China, you got a lot of government intervention in there, which is always a tough thing to deal with as a trader because it's hard enough without somebody chirping in the background trying to mess with your trade. But it's a reality. But from a technical basis, if you took it away and just said, well, the fundamentals are the fundamentals, and if that is reflected in the chart, this is look like in otherwise, let's just call it neutral to kind of clearly bearish scenario that we have here is with us not taking out really any meaningful resistance to say, okay, the worst is behind us. That's a place that, maybe it's not the first thing to get sold, but eventually if things do go down. So, I would take the Twilio Okta against JD.
Wow.
I think that, between the 3 of those, 2 of those are going to work.
Wow.
Put it that way.
Okay, so this is what's interesting because it does kind of seem like there's almost a little bit of a hedge to the strategy here. I mean, Ben, the chart for JD, it all looks like the best, doesn't it?
I think it's a mess, Oliver. It's not providing lean one way or the other for me. I mean, just dive into the 60-minute time frame. We're in the middle of a range that we've established over the last 90 days. Remember the well-defined trend environment we were talking about in terms of Twilio to the downside on the daily? Here's the daily on JD. Look, it's just, again, no real conviction one way or the other. Very, neutral for me from a technician standpoint. I do want to point out on the weekly time frame, you can see, again, a similar pattern. I mean, there's no really well-defined structure, balance areas to base trade on at this point. I mean, if anything, you could kind of lean on these lower highs that we're seeing if we roll over here and do eventually take out those lows from March around 40. But at this point, I just don't see much to hang your hat on.
Boy, all right. Okay, so that sets us up to fade it. Mike, give me the 60-second options trade.
Yeah, all right, well, so I was looking at that 100-day moving average. So that's at like 60.13, or at least it was this morning. So below there, I think that any sort of support's gone. So I'm looking at that just July 8th. I'm looking at the 55-58 put spread. That's $3 wide, and we can pay like 75 cents for that, or at least this morning. So we were up a little bit this morning. You can probably roll your strikes up a little bit, pay about the same price. So you're still looking in that high twos to high 2.7 to 1 risk reward on a put spread like that.
I like it. Okay. So the strike put spread here, 58-55 strike put spread, break even $57 and change. JD right now trading 62, looking for a little downside to counter the other two bullish trades. Fun time, guys. Thanks for bringing me into the convo. All right. I like this show. Trading 360, more of it coming up. Thanks, Mike Shorr from Prosper Trading, and our own Ben, of course.